Morning, everybody. It's 25th of February. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Morning, guys.
Morning, all.
Morning.
How you feeling, Steve?
Yeah,
After your
not bad.
birthday
Thanks.
celebrations?
Feel a little bit sort of younger, funny enough.
Yeah, you look
Yeah.
younger.
Starting going backwards.
Thank you.
You
Yeah.
put a filter on your camera or something?
Benjamin Button. No, I did see there's a new camera out, isn't there? There's a new camera which is like really professional. It's a couple £100.
Okay.
I'm sure they just put a big price tag on it and say
What for PCs? You mean?
Yeah.
And it
Looks
just wonders for you.
amazing.
Is the dog posing for it as well this morning?
Yeah.
Yeah, that's just natural. She just poses all the time.
That's very
she was
cute.
scalped. She was scalped last week.
Hello.
And there's the grumpy one over there.
Oh
with the pillow.
Yeah. There's the barker.
Yeah. So yeah, she's a good girl. She was my 50th birthday present, so she's 3.
Oh.
Aren't you, Binky? Who's a good girl?
Excellent. Okay, so back to market news. So there was some decent results out from the Pfizer and BioNTech COVID-19 vaccines yesterday, according to a large study that's been conducted in Israel. Researchers matched each vaccinated person with someone who hadn't gotten a shot, enabling the best analysis yet of whether extremely good results from an earlier clinical trial would hold up in the real world. So all positive on that front. However, a bit of a warning elsewhere. Sweden is saying that there is a high risk of a new spike in infections, and the Czech Republic is preparing a stricter lockdown to prevent a total collapse of its medical system. So clearly it hasn't gone away, but we seem to be getting on top of it, and it's good news that the vaccination is
all-time highs for the Dow.
Yeah. That's going from strength to strength. I mean, it was a bit of a rotation, so it's not been led by tech in the same way that it has done recently. It's been sort of a shift out to more value plays. So
NASDAQ was lagging.
Reopening. So obviously NASDAQ typically has been the leader of the move higher, but that hasn't been the case with this latest move up. And I saw yesterday there's been a new flurry of buying in GameStop. The shares have almost quadrupled from the Tuesday close. They was up 104% in yesterday's session. A final hour surge.
New CEO has come from Amazon.
Right. Okay. I mean, it sells games in a shop, right? I mean, surely it's.
Yeah.
I know gaming's a big deal, but you can buy them all online, can't you? So why would you go to a shop?
I don't know. It's about the number of people that actually go to GameStop. You know, they've got a huge client base, so I suppose it's like reselling to them. In all you need to do is sort of digitize it all, and you've got your audience there. Maybe.
Yeah.
But I mean, these new PlayStations, Xbox, you don't actually have a disc anymore, do you?
No, they're going digital, aren't they?
Yeah. Don't even have to go out and buy one. Just do it online.
Yeah.
If you can actually buy one, I'm still trying to get a PS5 since the beginning of November.
I thought it was a load of stock release the other day, and my brother-in-law got one.
Don't tell Woody that, genius.
Yeah, would he be around?
I'm sure he's not listening. I'm sure he's not listening.
No, he's still sleeping, mate.
Okay, so that was the US market. So in terms of the UK, obviously we've got the budget next week, and there is some rumours starting to surface. I think we're going to get an extension on the stamp duty to June. Talking about a £70 billion of targeted stimulus extending on top of what's already in place. It could also deliver a £9 billion voucher program to boost high streets and local retailers, and also suggestions that he could cut the duty on pints in pubs. So he could, become a hero overnight, couldn't he? With that,
I blame him for my blood pressure.
Yeah. There was more chat from Jerome Powell yesterday, confirming that rates will remain low for a long period of time. That helped ease some concerns and probably helped with that pushing of the Dow to new highs. So with that, shall we have a look at some charts? Who wants to go first today?
I don't mind. Go on.
Well, as we've been talking about stocks, shall we let Steve have a go first?
Have a go. Yes, I'll start with FTSE. We can see that we had a nice little pickup yesterday. Wrong chart. This is the head and shoulder formation that I've highlighted. It's obviously It's obviously not a formation yet. It's potential because it hasn't broken the neckline. So the right shoulder would be a break above here, a break above 67 or 6800 would question this. 68.12, should we sort of draw a line in the sand? The break above there, then I think 69.60 is the next target. Maybe sort of like rub this out. So we can see what happened yesterday. We had a nice little move up through the cloud, through resistance, above this previous swing high at 66.75, and it's retested that level and stayed above it. So 6,700, really looking to target 68.10 at the moment with this positive momentum. We see a similar sort of rally in the DAX, in the Germany 30, 13,665, the swing low there, and a nice little rally up, almost 300 points to 14,075. We've had a bit of a turnaround since 6 o'clock. So that's a bearish engulfing candle. If we break below this cloud support, this could easily extend lower, but it's reacted quite nicely from the 13,955 level. So a little bit of potential return to the positive side. As Zia mentioned, all-time highs in Dow broke above 31,723 and accelerated really nicely. So let's look at that on a weekly chart. Look at that bad boy. Quite a decent rally up since last March, when we saw the sort of like the pandemic swing lows. Nasdaq, not quite the same story. We had the all-time high on the 50 last week, and this week it's been under pressure. Let's have a look at the daily chart, and we can see how that has acted out. Now we've got this wedge type, channel type formation, and we sort of tried to dip below it, tested these swing low levels and reacted nicely higher. So there is potential for that to form a short-term base, 12,735, and really if we get a break above this level here, 13,900, still quite away from that obviously, over the next coming days, then that would show us that we've got a double bottom type extension. It's not really a double bottom because it's at the top of the formation, but there is potential for it to react like a double bottom and extend higher quite aggressively, maybe up to the even swing high or the top trend line. But still a way to go for that. Dow obviously leading the way. S&P is not far off its all-time highs. We're still sort of targeting this 4,000 level and see how we react around there from a price action perspective. The high at the moment, 3,964, trading a bit lower than that, but a nice, really nice bullish outside day yesterday, which sort of captured the previous couple of days of price action. So I like that a lot. The Aussie 200 is quite a commodity-based index, quite well supported recently with the commodities remaining buoyant, or oil and gold and everything. So that's in this wedge formation, which is typically a bearish formation. So we have to watch out for that, but that could take a lot longer to play out. Still a bit more to go in that. The Nikkei is no holding that baby back either. It's trading a little bit similar to the S&Ps, not far off the all-time highs at 30,750, looking quite positive, although China is not looking so good. Obviously, I think they introduced some sort of tax on
stamp duty.
That's right. Increase, which has led to this sell-off in China stocks. But I think we said yesterday, didn't we? We sort of sell off. Are we sure? Sell off. Are we sure? Sell off. Are we sure? Another indecisive day. So I think this it will sort of like recover from this. I think it's a short-term pullback. I would look at 17,974 as a potential support level where people will come in around about the previous swing high like they did before. Swing low, sorry. That's indices. I'll just have a quick browse over commodities. Crude oil, baby's come back with a vengeance. We talked about a couple of things. Obviously, we had Texas, the freeze last week, so the potential for a shortage, and then we had the realization that actually the demand seized as well, so that led to a sell-off, and now we're back on the trail up. We've talked about the long-term levels that we're looking at in here. We're quite clearly above this major trend line that we've talked about for a while now. 1, 2, 3, 4, 5 times it's traded close or found resistance at it, and we are looking to close above it if we continue this positive move into Friday's price action. We got a couple of levels, 65.21 and 66.53, which are previous swing highs. They're ones to look out at. 63.50 at the moment, so about 170 points short of the first one. But the measured move target for the ABCD correction comes in around about $68, so that's looking quite good. Brent crude oil, we talked about, seems to have accelerated a bit more aggressively, because we talked about well, actually no, it's probably still in line. It's basically hit its AB equals CD formation target, lovely, and it's extended higher. It's looking at this $70 level. So, and then further above that, we've got another swing high, but also the major trend line at the moment coming in around about $80. Seems like a long way off, but we were talking about this a few weeks ago when we were trading $53, $54. So not as far off as it was. Gold had a little bit of a setback yesterday. We're still in this bullish flag formation, we think, and we had a little bit of a poke up over the this week we got above 1800, didn't we? 1816, failed there and have reversed quite sharply. So if you look at maybe the shorter term chart, had a potential, had a reverse head and shoulders formation, which probably hit the measured move target, and we're coming back to test that neckline level. So support here, bottom of the cloud, it's a red cloud, so that's negative, so it's not great support, but it's a big thick band, so we can still rely on it to some extent. But I think a break of 1780 in gold, and we could easily see it retest the 1760 swing low. So slightly positive, buying into a little bit of negative sentiment this morning, but have a really tight stop in it. 1780 would be ideal for that. Silver continues to look quite promising. I don't know whether it's a sort of like buy silver, sell gold, maybe at the moment. Copper, we've had a sell-off in the copper only for 4 hours. It's only a short-term one, but with the 4-hour candle before that is a little bit shooting star-like, so be a little bit careful. So
volume divergence there as well.
Yeah, see the volume going down. Nice pick up, Joe. Volume sort of like drifting lower, prices moving higher, so bearish divergence, so potential for a correction, but I think around above the $4, up to 420, we should find renewed support, especially with the cloud coming in. I mean, look at the nice sort of like move up, small sort of like stall in the market, and then the extension higher. Obviously copper a major factor in manufacturing out in China. So I suppose China slowing down a little bit on the index side, or having that sort of like small pullback, may be influencing this slightly. Dollar index, Ian's going to talk about dollar index, but that looks sick as a parrot. The level I keep looking for is this.
It's got a 13 on it.
Has it?
Has it got a 13 on it? It was a question.
No idea.
You only trade 13s, don't you?
Oh, that one, yeah, 91.13, wasn't it, for ages? 88.25 for me is the real big test, but I think Ian's got a couple of levels in front of that. So over to you.
Lovely, thanks, Steve. Yeah, not looking great for dollar index this morning, is it, Ian? Euro dollar breaking up as well.
Again, we're as far as I'm concerned, we're still trying to play out this pattern. This is so this AB CD. So we had a positive AB CD formation, now playing to the downside. We've talked about this pattern potentially. You have got a confluence area here. It's 127.2 and 78.6% pullback. So it does make a near perfect Gartley, apart from the fact that we didn't rally up to 88.6. We only got to around about 50% of this level. But I would be careful around here. Looking at the basket, which is let's have a quick look. This is Joe's basket, which is slightly different to the dollar index.
Equal weight.
Yeah, it's just broken through every level. So according to the equal weight basket, there's no indication that that the dollar index is going to come to a halt anytime soon.
I've got a nice chart to show you quickly, Ian, if you don't mind me jumping in.
Flick it on.
This.
Oh my God.
So this is all of the sort of major currency baskets plotted on one chart. So, I mean, obviously probably quite difficult to see, but this one here is dollar index versus all the other currencies. That one at the top is Aussie. We've got New Zealand, Euro up there. So this is over the last year. If we go year to date, it's obviously
where do you get those crosses from, Joe?
So I've got them in our watch list under currency indices. They're super simple to find. So it's just DXY, CXY.
Everything with an XY.
Yeah, basically. I'll send you over them after. But I thought that was quite nice sort of snapshot or visual of sort of where everything's at. And obviously you can see this sort of purple line here.
Where's yen in there?
That's the blue line there. So it's the second worst. Let's just zoom that in a little bit. So yeah, around. So we've got Swiss, Japanese yen, and dollar index all at the bottom here, and looking pretty sick. And then we just got these New Zealand dollar, Australian dollar, and sterling just having it, and Canadian dollar as well.
It's a real good reflection of risk, because obviously the bottom three move lower when there's risk on, and the top four move higher when there's risk on. Yeah, and they are just diverging.
Look at that mess in there.
Yeah. Yeah, I like that. That's fucked my weekend again, isn't it?
Sorry, mate. I'll send it over afterwards.
So anyway, back to something more boring. So anyway, I'd take a little bit of caution here, but like I said, there's no real indication that dollar index is slowing down the sell-off. And I would focus on stock indices. I mean, as Steve said, they're all looking a bit wary. This is the Dow. So it's basically what the reason I'm showing this is because I'd watch the stock indices for a potential reversal before I'd look at buying the dollar. So the Dow would make a pattern up here, but I think at the moment, especially with this impulsive breakout, if you get a move to the downside, then I'd buy into it. I thought US 500 again. It looks like sort of dip buying at the moment still, and then this one, which is the Nasdaq, and potential head and shoulders, but still with a move to the upside. So I've just been monitoring them just to try and get a feel for the dollar index, and that's why I don't think it's stopping anytime soon, basically. So euro dollar, we're broken to the upside. There is an ABCD formation target here at 122.38. But I think using confluence areas is more likely to stretch up to here, which is 123.05. Also using correlation, there's no real sort of clear indication that euro is going to slow down quicker than anything else. In fact, euro sterling is still looking pretty positive this morning. Cable, I think it's a little bit of a different ball game. We talked about this level yesterday. We got a 361.8% extension up here. The basket in sterling looks overcooked, and that's why we focused on euro sterling yesterday. But again, I don't know if this will just poke through to new highs with that dollar index drifting lower and wash out a few weak shorts and then move to the downside. So medium term bearish, but I think there's chance of at least clipping the high trade from a couple of days ago, just to get rid of some weak shorts. Dollar Swiss, I think it's really just a waste of time, because it's both risk on, risk off currencies, and it's a battle of the two. And we have had a decent move higher in dollar Swiss, and that was actually Swiss weakness, not dollar strength, as we've seen from the single currency charts. But Swiss is now looking like it wants to move to the upside, and if that happens, then obviously this will then become free waves, and then we have a move lower, and potentially breaking this swing low before the next move higher. So out of risk on, risk off currencies, I think this one's probably looking quite weak at the moment. Dollar yen, and again a decent reversal, morning doji star on this time frame. We've got this confluence area up here, 106.60, 106.50. Again, I'd look at those stock indices to see whether or not they've reached their confluence areas to potentially get short. Dollar CAD just keeps on driving low with oil. We've broken the 125.21 level, which was a 261.8% extension. I remapped this yesterday because I just can't see a base really in dollar CAD. And when you look at the basket, when you look at the cross currencies, none of them have got an indication that it's going to stop. We have got a confluence area here, but it's pretty wide because this is a weekly chart, so it's 124.51, 123.45, and that does make a symmetrical pattern. That's a bat formation. If you're going to play these symmetrical patterns, it's always wise to target or to try and hit the lower fib, not this fib, because what has a tendency to happen, it just bounces slightly off that one and comes down and takes this one out and wipes you out and then moves to the upside. So at the moment, still bearish. If you get small rallies up towards 125.90, I'd look at that as a selling opportunity at the moment. Aussie dollar, I can't get anything on it apart from just keep on buying dips, basically. We had a doji style candle at this 261.8% fib, and it didn't hold, and it's rallied up. I think if you get sort of moves back down to sort of 79.37, is that, which is a previous swing high, that's worth contemplating a long trade. But like I said, there's no real indication that Aussie and Aussie crosses are slowing down. Euro sterling, this was our confluence area. We got a decent doji or a hanging man, or whatever you want to call it. If we get a close up here today, then we've got a morning doji star, and that should signal that a base is in place for euro sterling. And euro yen, again, we said sort of confluence area yesterday at 128.67. It's just smashed through that. Can't really find any topping formations. I mean, this again was a confluence area. It's broken through there. Got a 261.8% fib here at 129.76, but I can't see this slowing down either. I'll still be buying dips in euro yen. You just purely using correlation. Euro looks strong, and yen looks weak at the moment. So I think this is just going to continue to the upside. That's me done.
Thanks, Ian. Okay, so the gun to the head trades from yesterday. You made a nice call on euro sterling, which you just showed the chart for, potentially a bottom pattern forming there. There's a nice reversal candle on the daily. So you had a 0.93R win on that yesterday, Ian. It was the only win on the day. Steve and I were stopped out. Steve on Bitcoin.
Let's have a look at the big chart.
No, we don't need to watch the big chart today, do we?
Oh, it was his birthday yesterday. Give him a break.
We'll leave it till Friday.
Yeah.
There you go.
Oh, just have a look at that.
Bit of a gap.
Yeah,
Filled the gap and moved off.
Gaps always get filled, don't they?
Sounded so confident there, Joe.
Yeah, I'm having a bit of a stinker, to be honest. But
we have been talking about it on the other chat.
Yeah, behind my back. Yeah, thought you might. Yeah, so 68 was my high on the talking board. Now down to 52, so 16% drawdown, which is not good. Right, let's get back on it then. Who's got an idea today? Hopefully one of you two, because I still haven't, and I'm still looking.
I have.
Go on, Em.
Theta.
Oh, fuck.
No, here we
Well,
go.
you can trade it.
Not very many places.
The things
Not
we
an
do
FCA
for
broker.
friends.
I'm just doing this for my pals anyway. Well, I'm not actually, because they're all buying it, but
Yeah, you're trying to forewarn them that things can go down as well as up.
I've told them that I'm buying it here, so I'm just trying to force it down there, basically. So everything lines up for a move lower. Normally, corrective formations are in three wave patterns. So as far as I'm concerned, that's one wave. And perfect A, B, C, D formation takes us down to a 214. We've got trend line support coming in at the same level. We've got 78.6% pullback level at 78. So that is the prime area to buy it, I think. But I think it's definitely going to move. Definitely? Did I say that? I can't say that on air.
That's a guarantee.
I can't say that on air, can I? So I'm getting short at, don't even know what the price is. Does it matter?
Doesn't really matter, mate.
It was a 313.
313. I'm having it all. 56.
All the decimals.
Profit target 215. Stop 345. That'll do. So just over 3R. So getting short of theta US dollar T for token at 31356. Stop at 345, targeting 215.
Boom. Steve, what you got?
Well, you know what? After all that I've said, I think I'm going to try and sell one of these indices.
I was looking at the same thing. I just can't. They don't look great, do they? I mean, other than the Dow obviously moving higher.
No, I mean, if you look
some
at
of the European ones look quite choppy.
Yeah, I mean, I'll just look at this weekly one in. Oh, I said weekly. This is the China 50. This is the weekly count. I mean, that's a pretty horrendous looking reversal. So I don't know whether to go for a little bit more of an extension lower on this, going from the hourly chart, using this level as a little bit of resistance. Let's get short here. 18,000. What, 767? We're going to have the stop pretty tight. 19,017. And with target, I move to 18,000. That's what I'm looking at in China 50.
Boom. Good luck, mate. I am going to take a look at Euro Sterling. I like what Ian had to say about that. This is the hourly chart. I've got a decent break of a channel here, potentially a bit of a bottom, cup and handle formation. Looks like it wants to go higher, so I'm going to buy it now at 86.23. I've got to have the stop quite tight because the R isn't particularly great. I don't think it's got an enormous amount of upside potential intraday, so I'm going to go for 86.68 as a target and a stop loss at 86.05, looking for 2.66 R on that one today. I mean, ideally I'd have a stop down here somewhere at 85.94, but yeah, playing the game, trying to get some decent R on the board. So yeah, that's the three trades for today.
Good luck.
News wise, what we got? Anything that's going to give these trades a kick up the backside potentially?
Durable goods, initial jobless claims,
GDP, fourth quarter GDP in the States. So there's a
ECB speakers.
3 lots of data out at 1:30, as you said, durable goods, fourth quarter GDP and initial jobless claims, and then pending home sales at 3. Any speakers on the list today?
Fed's Williams, but 8 o'clock. I can't even, what is it? Fed's Quals at 10 past 4.
Quals.
Sure. Loads of people will be writing in telling us how to pronounce that.
Yeah, I hope so.
Yeah, and then loads of yen figures overnight, but retail trade, CPI, they don't give them much. They don't give them a treble, so maybe they're just nonsense. And tomorrow's really boring, isn't it? Until
well, it's Friday, so it's pretty good.
Lots of figures, but it's not. What day are we on today? Oh God, yes. No. Oh yeah, Thursday. Jesus, I was on Wednesday. Could have watched that.
Yeah.
Groundhog Day.
Right. Okay, then let's wrap it up then, shall we, gents?
Yep.
Cool. Right. Have a good day, everybody. We'll be back tomorrow morning.
Yeah, enjoy.
Cheers.
Cheers, guys.
Bye.